we have made certain cash deposits with Ipic. Ipic has in turn guaranteed, Ipic has guaranteed $3.5 billion of US dollar bonds of 1MDB, not just the principal, but principal and interest. So the total exposure of Ipic on day one was $3.5 billion of principal and up to $2 billion of interest. Today it's $3.5 billion of principal and about $1.5 billion of interest. So that is their obligation. They have guaranteed us. Now, we have those cash deposits in US dollars, and we have the fund units that, again, if you look at our balance sheet, you will see the fund investments that we have made. So we have agreed with Ipic that we will do a swap. So they will take over our debt, which, by the way, they have guaranteed, as we discussed earlier, and we will hand over the US dollar cash deposits and the fund units. Now, you might ask, why don't you just pay off the bonds, right? I'm sure you're going to ask that next question. And the answer to that is bonds are unlike loans. In a loan, you have a defined series of lenders, and you negotiate with the lenders, and you can prepay. Bonds are capital markets instruments. You have hundreds of investors, and in order to undertake a repayment and so on, you need agreement of all those investors, the identity of which changes daily because they trade. And secondly, when an investor makes a decision to buy a bond, he looks at the interest rate on that day, he looks at the credit spread of the obligor, and he has a yield to maturity that he takes in calculating that. So today, that particular bond is trading at a significant premium. It's trading at about 110. Again, you have to check that. It's trading at about 110 compared to the face value of 100. So it costs us more to buy it back. And the bondholders will definitely demand a premium to cancel that bond because their future returns, when they first made the investment, they assumed a certain series of future returns based on the coupon. They will not have that anymore. So it is much more complicated, much more difficult, and much more expensive to pay back a bond or redeem a bond compared to a loan. And particularly in this situation where we have the cash and we have those units that over time will generate income and can be used, it is a lot faster, easier, and less complicated to do the swap. Thank you. Thank you for your time. Really appreciate everything. Thank you. Yeah, thank you.